So our community, the ones with the hands of steel at the moment, that's because they understand and they want to learn macroeconomics, guys. This one's not just going to be a message about crypto. This is going to be an emergency message about the markets. It's not just people inside crypto that's getting hurt. People outside of crypto is getting hurt, guys. The cycle is playing out. And guess what we've been saying on here for months? We need lower interest rates. How do you get lower interest rates? A signal needs to be sent to the Fed. How do you send a signal to the Fed? You need to crash the markets. How do you crash the markets? Tariffs, tariffs, tariffs. It's all part of the cycle, guys. So I'm going to explain through the charts today exactly what's happening, why you need to remain calm, and how these capitulation events often give the biggest opportunities possible. Firstly, introductions out the way. I'm Keith. This is Crypto Bullseye. And secondly, I'm talking to you. So if you want to understand exactly where we are in the cycle, as far as macroeconomics are concerned, as far as how we can collectively look at different things, different metrics, different analysis to paint that bigger picture to where we are in the cycle, how we can play the next move, whether you can take advantage of what's happening now in the market. All of these metrics will make sense to you by the end of this video. It's going to be a bit longer, guys. The ones that stay to the end are the ones that are going to be more successful in the market because they're going to understand exactly how the market works. Anybody that's been new to crypto, guys, in the last 6 months, last 12 months, they're in a loss. Anybody that's new to crypto don't understand a market cycle. If you don't understand a market cycle and you're in a loss, guess what you do? You try and protect that last bit of capital that you've got, i.e., you sell at low levels, you capitulate. When you capitulate, guys, that gets bought up so quickly. Why does it get bought up quickly? Because the prices are cheap, and then the smart money comes in and they take it at those lower levels. To take it at those lower levels, guys, they need to grind the market down and grind the market down. It is all one big manipulative cycle, but it needs to happen, guys, because we're a debt-based economy. And for a debt-based economy, we need to refinance debt. For us to refinance debt, we need lower interest rates. For lower interest rates, we need a bad economy. For a bad economy, someone needs to send a signal to the Fed, guys. And I've been saying it time, and I've been saying it time and time again. Trump needs to send a signal to the Fed because they need to reduce interest rates. So the US, the UK, Canada, China, everybody can refinance their world debt so they can stimulate their economy, increase GDP, and then the world looks rosy again. But before that happens, guys, we need capitulation. We need extreme fear. So we're in fear at the moment. We were in extreme fear. We can look at the fear and greed index. When's this? Goes back to 27th of February, we were at number 10. So we were at 10 on the 27th of February. Now we can look at the chart, and one thing you can see here, we put in a lower low, mini capitulation, and then we put in a lower high. When we put in a lower high, we've come back out of extreme fear and we've come back into fear. So we've come back into fear, and what we're going to do is we're going to look at the chart. Each one of these boxes, this is the Bitcoin chart and this is the weekly chart. Each one of these boxes represents extreme fear within the market. And I've gone back and I've looked at extreme fear and I've added these boxes every time that we're in extreme fear. And one thing you can see, guys, is we've got an indecision phase each time. So these things last quite a while. The last one lasted 14 weeks. One before that was even longer. This was the end of the bear market, the indecision period before we had a new bull run. That lasted for 32 weeks, guys. That's 3/4 of a year. So when you've got these indecisions in extreme fear, that is when you get a big pump, and that is when you get a big pump. And we can go back and you can see every single time, guys, every single time, every single time, every single time, it's followed by a bull run. So we get a bull run. This was a mid-market bull run. So we had the May 2021 crash. I remember that like it was yesterday. Then you had extreme fear. This is where people thought everything was over. We got the second leg up, just managed to put in a new higher high. But exactly the same thing happened, guys. We went to extreme fear and we had the big pump. Extreme fear, big pump, extreme fear, big pump. And that's exactly where we are now. So we've come out of extreme fear. If we come back into this box, that'll represent extreme fear again. And that could be the final capitulation for Bitcoin if we do get further downside. I mean, we can look at how Bitcoin's held up, guys. Why is Bitcoin held up compared to the US 500? Why is it held up compared to gold and the Dow? Guys, because remember, the markets have opens and the markets have closes. What's crypto? It's a 24-hour market, guys, 24/7. So 24-hour market, and it's 24/7. And that means that when you get negative sentiment before a market open, i.e. at the weekend, that means that Bitcoin has its downside priced in. So Bitcoin's already had its downside priced in, and Bitcoin's holding up against these big boys here. That's a good thing. So next thing we're going to look at, guys, how far have we got left in the cycle? Have we got enough for alt season? Anybody that's new to this channel, this is the first time you've seen this. Anybody that's been around on this channel, you're probably getting bored of me showing you this, but I'm going to show you it for the new guys anyway, because it's all relative. So what I've done, guys, in 2015, I've gone from the bear market low all the way to the bull market high. Why have I done that? Because I want to test how long the actual cycle is. That was 152 weeks. So let's do it again and flip it in reverse. From the bull market high to the bear market low, that's 52 weeks. So we've got 152 week bull market, 52 week bear market. Okay, let's do it again. From the bear market low all the way to the bull market high, 152 weeks, guys. Does that sound familiar? 152 weeks. Let's do the bear market again. From the bull market high to the bear market low, 52 weeks, guys. So you've got 52, 52, 152, 152. Why is that significant? Because that allows me to measure from the bear market low to find out exactly where 152 weeks would take us. 152 weeks would take us to the 13th of October, 2025. Is that going to be the end of the bull market? Probably not, guys. It gives us an estimation. It gives us wiggle room to find out how long we've got left in the cycle in comparison to previous cycles. So then we can look at other metrics, guys. We know that we've got 28 weeks. Is 28 weeks going to be enough for an alt season? Because we know for an alt season, we need this drop in dominance. Dominance is just pushing up from this ascending wedge pattern, which is a bearish pattern, by the way, guys. It's pushing up, and this thing is getting exhausted. You can see we had the wick there, big rejection. It's trying to fill the wick, and then once we've got that, I can't see us putting in a new high for dominance, and I can see a big pullback in dominance. But is 28 weeks enough for alt season? Let's go back and compare previous alt seasons. 28 weeks for an alt season. Zoom out and we'll see. What about the 2021 bull market? This alt season, from the top of this wedge of the dominance all the way to the bottom of the wedge, lasted 20 weeks. So that was the previous one, 20 weeks. What about the one before that? 23 weeks. From the top of there to the bottom, 23 weeks, guys. So you've got a 23 week and you've got a 20 week. And then we've got an estimation of 28 weeks left. So is 28 weeks enough for an alt season? 28 weeks is definitely enough for an alt season. But what is it going to show us, guys? We're probably not going to get a mid-market crash like we did here. Probably not going to get that. It's more going to be like a 2017 translated cycle where you're going to run fast, you're going to run hard. It's going to be small, possibly 20% pullbacks, and then it is going to be really difficult to play. I can see that's how it's going to play out, guys. And I have had to change my thesis slightly. The market cycle is exactly the same. My thesis as far as the market cycle is exactly the same. However, within that market cycle, that's when things are different. So that's all positive, guys. That's showing us we have got enough time for alt season. It's showing us what happens when we're in extreme fear. When we're in fear, we get that pump. So we're likely to get that pump. And the next thing we're going to look at is the DXY. The DXY. We expected this to happen, guys. I've been saying this. We wanted a drop in the dollar. If we get a drop in the dollar signals more on-risk assets have better chance of success. So when you've got a weak dollar, that is strong speculative assets. When you've got a strong dollar, that's weak speculative assets. Why is that? Because people go into the dollar in times of fear. It's the world reserve currency. So the Dixie is a representation of the dollar against a bag of fiat currencies. The biggest bag of fiat currencies is the euro, and then you've got the Japanese yen, you've got the Great British pound, the Canadian dollar, and a few others, guys. But the biggest measurement is the euro. So the euro against the dollar is actually a strong metric, and I'm going to probably build that into future analysis, but not in today's video. So we expected a rejection at the 50 weekly moving average. We got that rejection. Where did we expect it to come back to? The 200 weekly moving average. We expected a big buy up at the 200 weekly moving average, or a stronger dollar, should I say, because this is just a representation of the dollar against a bag of currencies. And this 200 weekly moving average is held up, and we've got a big push up above that. Aim of the game, guys, get this thing below the 200 weekly moving average, and that is going to be strong for crypto. But it's not just crypto that we look at. We look outside of crypto, and we look at the stock markets. What is this? This is the volatility of the S&P 500. When you've got low volatility, that's showing that there's more confidence in the market. When you've got high volatility, that's showing fear in the market. So this is showing it's real fearful. VIX is showing that is so fearful that we can go back in time. We can see last time it was that fearful was all the way during the pandemic 2020. So we're getting that capitulation event. We've got all these metrics that's showing us we're in the middle of a capitulation event right now. What about the S&P 500? We've seen the volatility of the S&P 500. It's gone crazy. What about the S&P 500? Crazy. Absolutely crazy, guys. Go back on the S&P 500 and we go back when we seen a wick like this was all the way back down here. March 2020, guys. We've just talked about that. I'm not going to say it too many times in this video, otherwise I'll get a shadow ban. So have we got further downside to go going into next week? What is this chart telling us? Firstly, it's telling us one thing. We've had a drop from the top all the way at 18.24%. I said this move up here, guys, looked really weak. I said it when it was happening. We needed a pullback. So we've got that pullback. Have we got any further downside? Where would the further downside be? Of course, 200 weekly moving average. That's another 7.53%. Guys, it doesn't look much. If the stock market on Monday and Tuesday next week drops 7.53%, that would be extreme fear. That would be panic. That would put this back into extreme fear. And then we would have a more chance of a catalyst, because all that we're trying to do, guys, all that we're trying to do is pull the markets down, or all Trump's trying to do is pull the markets down to send a signal to the Fed that we need to introduce reduced interest rates. We need to refinance our economy. We need to reduce interest rates. And I have been saying it, guys. People didn't understand. People didn't believe me. But I've been saying he needs to send a signal to the Fed by doing this. This is why he's doing this. Everybody hates him for doing it. However, he's doing it for the bigger overall picture. Now, this is it. This is him sending the signal to the Fed, guys. He's actually done it. This would be a perfect time for Fed Chairman Powell to cut interest rates. Can't say it clearer than that. He's always late, but he could now change his mind, and he could change it quickly. Energy prices are down. Guys, this is what he's trying to do. Energy prices are down. Interest rates are down. Inflation is down. And of course, Mr. Trump's got to chuck in eggs in the mix. So eggs are down 69%. Jobs are up all within 2 months. A big win for America. Cut interest rates, Jerome, and stop playing politics. Can't get a bigger signal than that, can you, guys? So next thing, guys, interest rates are dropping hard. Rates are coming down soon. See collectively how all of these things, all of these metrics paint that bigger picture to find out exactly where we are in the cycle. So if we were at the end of a bull run, we would be in euphoria. If we were at the end of a bull run, we wouldn't have much wiggle room left. If we were at the end of a bull run, the dominance wouldn't be overbought. If we were at a bull run, if we were at the end of a bull run, the dollar wouldn't be coming down. So all of these metrics are telling us quite the opposite, guys. Everybody feels like we're at the end of a bull run. However, when we look at these charts collectively, in addition to the fear and greed index, it paints a picture of calm, guys. Everybody knows what my metric is for Altseason. This is my metric for Altseason: a break and a close of 1.14 trillion. Of the total 3 chart is going to indicate me scaling out of my position over a 10 to a 12-week period. Why 10 to 12 weeks? People keep asking me this question. First and foremost, guys, we've said there's 28 weeks left in the cycle, roughly as an estimation. Might be 24, might be 29. Who knows, guys? I'm not a magician. So one thing we've got to do here, as far as total 3 is concerned, is not just get a break and not just get a close, but we also need to get to the all-time high. So that's going to take some time as well. If, guys, this thing run hard, and I've scaled out all of my position after 10 to 12 weeks, that means I'm out of the crypto market after 10 to 12 weeks. Is that a bad thing? I'll miss euphoria, guys, but what that allows me to do is use some of my capital, a small amount of my capital, to trade the last part of the market with stop losses on there, knowing that when the market reverses, I'll get stopped out in profit. I'll already have my capital banked from the previous 10 to 12 weeks of scaling out. So that is the method in my madness, guys. That's what I'm going to live and die by. Ethereum's the next thing, guys. Ethereum, why is Ethereum different this cycle? Because they've been shorting the hell out of Ethereum. Bitcoin's been putting in higher highs, higher lows, guys. The same people have been shorting the hell out of Ethereum. Ethereum is back at this support zone here, guys. We've just lost this trend line, the diagonal. We've come back to the horizontal support. And this 1,800 is going to be a strong point for Ethereum. Is this area here going to be the area where the shorters are going to become the longs, where the bears are going to become the bulls, and then we're going to get a reversal. We're going to get an increase in liquidation as far as Ethereum is concerned. And we're going to get a surge in market cap, because for Ethereum, just to get back to its all-time high, that's 167% to the upside, guys. That's about 300 billion into the crypto market, just into Ethereum, nothing else. Then we look at ETH BTC. ETH BTC, why do we look at this? Because we're waiting for ETH season. Why are we waiting for ETH season? Because within ETH season, we get an alt season. So Bitcoin, but within that, altcoins are bleeding. And then this is the opposite. When the reversal happens is when you get ETH season. We're waiting for a breakout for ETH season here, guys. And when you get ETH season, within the ETH season, you get an alt season because of the rotation of capital from high risk, or from off risk into on risk, into more on risk, into more on risk as the cycle progresses. Right, okay, guys, so Join the Discord group. This is a community of like-minded people, a great bunch of people. We're made of steel, guys. Let me know in the comments if you did find this useful and if you understand macroeconomics a lot better, and whether when I painted this picture collectively to understand exactly where we are in the cycle, what could happen going into next week, and how you can take advantage of where we are in the cycle. Let me know in the comments, guys, because these are my favorite videos to do. I'll see you in the next one.